Yo guys, what's up? It's Tori here with another weekly market outlook. Now heading into the month of August of 2025. Let's take a look at what the markets have in store for us next week. So here we have the DXY, and the DXY has actually encountered a really big bearish black candle right here on the daily. I paused for a bit because that sounds a bit weird, but essentially we saw a very big bearish candle right here on Friday, following the latest batch of econ data, right? We saw inflationary pressures remain sticky, right, with the CPI rising from 2.3% to 2.7% in recent months, while on Friday we also saw the labor market taking a disappointing turn, right? We saw NFP coming in. Let me just pull that out right here. So NFP on Friday, right, let me just showcase to you right here. NFP on Friday actually showcased quite disappointing data, right? For July, it came in at just 73,000 jobs, which is quite far beneath the forecast of 110,000, right? So this kind of compounds concerns because the prior month's NFP was actually revised down from 147,000 to just 14,000. So we are losing a zero right here for the labor market. So not a very great look, right? Because this casts doubts on the previous optimism on employment, right? We also did see manufacturing data slipping further into a territory of contraction at 48, right? And also we saw unemployment tick up to 7.9% for the U6. So this is not very great, even though we do see, average hourly earnings, it did increase modestly, but this is definitely not enough to offset the really broad concerns, right? This is really bad data coming out for inflation. It's sticky, it's coming bad for the labor market, and this is what pretty much drove the DXY very low bearish on Friday, right? We saw a big almost 2% drop right here, 1.6% drop, so almost 2% drop. Okay, so with this in mind, the market expectations for a Fed rate cut in September, it has soared very high, right? If you take a look at the CME Fed Watch data, it rose from 60% to over 80%. Okay, so this is looking not too great for the dollar. Although long-term dollar bulls, I don't think they have entirely thrown in the towel just yet, but short-term or mid-term at least, we are going to see some DXY bears. Okay, so this level right here, if it does hold, I'm not expecting it to give a big reaction. We could just retrace and cover some of this bearish the daily candle move on Friday, and then head lower from here, potentially coming into this 20 EMA to retest. But then ultimately I'm expecting a price to come down into the 97 mark right here, or even lower into the 96 region. Okay, I'm expecting the dollar bulls to kind of fail to bring price higher from here, to come back into this level, and then we could see some reaction from here. Okay, so right now, unless inflation, it does surprise people to the upside, and if that happens, we might see rate cut expectations being stalled. But right now, I think the dollar may struggle to actually regain its upwards momentum, right? So we might either just see a range, or we could see a pullback into some of these areas of support right here, drawn out by the UFO. So these areas are potential areas of support, which I'm eyeing to look for potential longs for the dollar, right? Even though it may just be like a short-term long, I'm expecting to wait for price to come back into this region to long from here. Okay, you could take a short pullback trade off of this EMA retest. If it does break it, then we're definitely heading lower. This is a 20 EMA, but as of now, there's nothing really showcasing to me that we are going to be heading higher for the dollar index right now, which also brings me to the next part, which is the the indexes, right? So we also saw the exact same bearish movement in the NASDAQ, in the S&P, in the Dow Jones. This is a really potential bearish signal for a lot of people, right? We see a swing high being formed on the technical side of things, but taking a look at the fundamentals, we're seeing this thing come in from the recent new tariff announcement by President Donald Trump, right? This sweeping global tariffs, which is pretty much a shift toward protectionist trade policy, have now rattled the indexes, which we can see right here. We're seeing sell-offs in the S&P 500, we're seeing sell-offs in the NASDAQ as well. Last week, remember, I wanted price to kind of head higher into this region, breaking all-time highs, and then come back lower, but we barely did that. We just kind of swept this and then pretty much just tanked lower from here, following this really bad econ data release, right? This kind of triggered this large downwards momentum move right here. Okay, taking a look at the VIX, we saw the VIX head really high up almost 25% into the 20.37 mark, which is signaling that investors have now started to go more cautious and fearful. Okay, so with the VIX breaking out of the 200 EMA, 20 EMA, with this large gap, with this large move, this could signal a potential pullback on the indexes, right? So let me just pull up S&P 500. So S&P 500 also seeing the same thing, right? We're within these areas of support, but looking at how kind of clumped everything is, I don't have a clear area on the daily, so I would technically need to go down onto the 4-hour, and the 4-hour we pretty much filled off the areas of support right here, which is why no areas are showing, and the nearest ones are actually right around the 6K mark right here on the 4-hour time frame. So we're seeing very heavy bearish momentum, right, following everything. We've also retested the 200 EMA while breaking lower out of the 20 EMA. Okay, so now the question now comes, am I completely bearish on indexes? Will I be completely bearish on indexes is the question, the $1 million question right here. And to be honest with you, short-term answer will probably be yes. By short term, I mean probably a week or two until we see the next set of data releases. I wouldn't say I'm bearish mid-term to long-term, because market resilience has pretty much been a recurring theme throughout the year, right? We're seeing very strong bullish movements, and we're seeing pullbacks with some catalyst news. But really at that point, the market has already been overextended. So some of you might even say that, oh, you know, the bearish move is just a pullback and everything else, like a catalyst, is just an excuse for a pullback. That could also be the reason why. So, you know, as of now, I'm short-term bearish. Yes, I am short-term bearish on indexes. But until the next set of data comes out, I won't exactly be completely looking to just take indexes down to hell, right? Because tariff may be a noise, right? It just may be noise. Others may see it as a potential trend of de-risking being started, right? But like I said, it's too early to say. We kind of need a lot of more confirmation on earning reports and upcoming econ data to support this soft landing narrative, which is a bearish read on indexes. So technically now, yes, you know, we have this really big bearish leg. You could play pullback shorts, right? So pullback and shorting, target the 200 EMA or targeting some of these levels down here, or you're going to the daily if it's unclear, right? Targeting some of these lower boundary levels, right? This is the recent impulse leg, so you could say, oh, I want to, you know, short down into discount, which is also possible, right? It all depends on what your strategy or approach is. I'm using the UFOs, which is what gives me a more objective manner, because the indicator pretty much plots out everything, right? I'm not doing anything on my own. I'm just using my own discretion to see which zones make the most sense and which zones do not. Okay, so you could play pullback shorts, yes, on the S&P 500. Same thing goes for the NASDAQ. Right here, you could also do that. So you could play pullbacks on like the lower time frame. We have some key levels right here. All of them are pretty much retesting the EMA. Right here, 200 EMA. You could definitely play a pullback short. You could have your first level here, second level maybe at the 20 EMA, maybe this level right here, or maybe at the top, which I don't think we're gonna reach. But if it does come up to that, we could definitely look for a short once we shift bearish, right? Same thing for the Dow Jones right here. Same thing, you could also just take shorts. The Dow Jones actually is leading because we've pretty much broken out of the 200 EMA. We're leaving a bunch of areas of resistance on top. So pullbacks, shorts are definitely valid on all indexes. It all depends on which one you prefer to trade and which one, you know, plays out the smoothest. That's something that is completely up to your own discretion. But remember, I'm not completely set stone in terms of my midterm to long-term bearish idea. I want to see the next set of data releases. Okay, so that's all for indexes. Let's take a look at the pound dollar, right? So the pound, it pretty much remains one of the weakest major currencies as of now, right? You know, we're really seeing poor UK data come out, you know, which includes things like sluggish growth and persistent inflation pressures. We're seeing all of these come into the pound. So which is why even if the dollar is so weak, the pound is also not gaining any strength, because the pound is also pretty much, you know, weak as well, which is why we're seeing cable set in a strong leg lower. Okay, and any pullbacks, it could offer fresh short opportunities for traders to target, you know, the new lows that we just formed right here, or some of the recent lows right here. So we did just recently tap this area of resistance right on Friday. So on Monday morning, for me it's Monday morning, technically it is Monday morning, yeah, we could see a gap lower, or if it just threads around that area, that region, a shift lower, a pullback could be great for you to get inline short, okay, for the pound, because there's no econ data supporting pound strength, and there's also no technicals supporting pound strength. You could target the most recent lows as your first target, which is also where the EMA is currently being based at. So that could be a fresh area of support for you to take your sales off of it. All right. So compared to that, though, seeing UCAD, we just broke pretty convincingly out of this range right here, also above the 20 EMA. We are seeing this, you know, being bolstered by US dollar, previous, you know, US dollar strength, and also recent CAD trade concerns, right? Trump did announce that he's going to raise tariffs on Canadian imports up to 35%, and this has injected volatility into this specific pair. Okay, so we are basing around the 200 EMA right here, so you could say that we do have some cause for concerns for a potential pullback into that range, but I don't want to see us break beneath the 20 EMA, even if we do come back into that range, right? If we see that range hold, I definitely think that we could see a potential pullback to long UCAD into this area of resistance on the daily time frame right here. That could be a really good short-term intra-week or intra-month swing trade, right? If we do respect the 20 EMA, that would be a great sign. I don't want to see us violate the 20 EMA right here. Let's actually see if there's any we have a bunch of areas of support right around here in this region of the 20 EMA on the daily, right here on the 4-hour. So a good idea would be to look for potential support to be held around this region if you want to take trades up into that daily area of resistance right here, which is quite a good, it's around like a 170 pip range, so it's not exactly too bad, right? It's not the worst trade ever. Okay, so this is pretty much it for, let's take a look at EURUSD. Alright, so EURUSD is pretty much showcasing the same thing. we were pretty much basing around here, and we broke to the 20 EMA. We broke to this recent area of the swing low right here, and we formed a bearish resistance. We're now coming up to retest this 20 EMA. If we do hold, right, if we do hold and we do shift bearish on the low time frames, I do think we could take shorts down into this area of the recent swing low maximum. I don't want to see us push too far lower, because once again I am pretty much bearish on the US dollar, right, because of the recent inflation reports or the recent labor growth reports. I'm pretty much short-term bearish on the dollar and short-term bearish on US indexes as a whole. Okay, so that's pretty much it for the forex pairs. Let's take a look at gold. All right, let's take a look at gold. So gold is still pretty much going nowhere, right? We did see this large push higher. What is that? What am I drawing? Sorry, we did see that push higher on Friday, following a weaker dollar as well as weak labor data, with a modest rally of, let's say, 2% on the day. I don't exactly know what percentage it is on NFP. Let's take a look. So we did see like a 1.4, 1.5% gain just based off of NFP alone. So we still are pretty much range bound, right? We're trapped between this swing high and this swing low. We're pretty much range bound right here on the daily time frame. So I can't say for sure that we are going to be going in either direction as of now, but seeing that we could see a potential September rate cut, right? We could see a potential rate cut in September of this year. This now means that the dollar is going to be relatively weak. Okay, and now we're seeing weak dollar right now, and we're expecting weak dollar in the future. So this means that with the market being so with the markets being so uncertain in terms of econ data, in terms of future expectations on growth in the US economy, we could be playing the devil's advocate right here and be like, okay, we could just long gold right here and then hope for it to take out this high. It stops beneath this low. It's almost like a 1-to-1 at most, it seems like. Just a very, very short-term trade, and it should be a very small trade because current price action, is leaning bullish. Econ data is leaning bullish, but of course sentiment could flip very quickly, right? It could flip very quickly. Okay, so what I want to see is if we could hold above this 20 EMA, and then we can break out of some of these low time frame areas of resistance and form new areas of support. I want to see us form a new expansive leg higher, comes back down, pulls back into areas of support, and then pushes higher from there. That's what I would like to see if we are bullish on gold. I actually did enter a small DCA holding, investment in gold right here on Friday on gold ETF, SPDR gold ETFs, because I'm expecting price to potentially rally higher from here. But it's a very small position, right? Even if price does kind of pull back lower, I don't really care because it's not an actual active trade. It is just purely an investment, right? So those of you that follow my Instagram probably know that. Anyway, so gold still range bound, right? Expecting gold bulls, but not really convincing as of now, seeing as there's no decisive break on either side just yet. Okay, so let's take a look at Bitcoin. Take a look at Bitcoin right here. This is from last week. Let's skip the analysis there. So what I said last week is if we were to see us break above this range, right? Last week was still pretty much a risk on sentiment until we saw that revision, of course, as well as inflation data and Also, we saw weak NFP reports. So before last week, I was actually expecting Bitcoin to push higher if we could, because this seems like a rally potential base right here. If we could get another rally, it would be great for a pullback into that area to then long. But unfortunately, we saw weak fundamentals coming to the markets, right? So with this break of the 20 EMA as well as this break of this rally low right here, now instead I'm expecting us to potentially come back up to retest the 20 EMA, retest this area of resistance, and then bounce lower into the nearest area of support, which is currently around the 109k, the 107k price mark right here. Okay, that's what I'm expecting Bitcoin to do. So if prices come into this area, you could potentially look for short-term longs, right? Maybe this area holds, but ultimately, as of now, I think Bitcoin is really overextended, right? We just pretty much pumped all the way higher, or from April of this year, suddenly pumped up, and then now we also have this recent leg right here pumping higher. This zone seems like it's just close around discounted pricing. If I were to just mark this out, seems like it. Yep, it's just roughly around that area in discount. So this could be a good area for you to take off your shorts and for you to look for potential longs. But short-term longs, of course, you could hold a small position if you want to, but most of your bulk positions should be taken off once we come into this area and see a bounce. You could take most of it off. Okay, same thing for Ethereum. Let's take a look at Ethereum right here. We also did see a crazy bullish push move higher into from Ethereum, right? We're coming into this general region of stacked highs, which Ethereum seems to be failing to breach. I don't think it will breach it this time around as well, seeing as we have weak data to support a risk on sentiment, which is not good for Ethereum and crypto in general, since they are risk on assets. So we did just break out of that 20 EMA, also formed a new area of resistance. Same thing applies for Ethereum. You could see a pullback into that area of resistance, or maybe just reject off of this 20 EMA and then come down lower into this area of support around 3k to 2.8k mark right here. That's what you could also be looking for on Ethereum. Okay, so my crypto holdings are still ongoing, right? I'm looking to add in again once we come down into these areas, as well as that 109k mark level on Bitcoin. But until then, I won't be looking to add a lot here. If we do come down into this area of this rally, this rally base area right here, this could be a good area for me to add more positions into my crypto holdings as of now. So yeah, that's pretty much it, I think. Let me just see if we have anything else I didn't cover. Yeah, not really, no. So yeah, so that's pretty much it for this week. You know, of course, it's September FOMC meeting approaching, and that is a pretty pivotal moment, because that is the meeting for quarter 4 of the year, or at least coming into quarter 4 of that year. So as of now, the market is pretty much largely pricing in a rate cut, right? But we do need further clarity coming in for the next set of figures, which sounds very boring, because I always say we have to wait, because it's true. Just one set of bad data isn't exactly enough to kind of shift everything, right? Even though we are seeing an uptick in inflation, we are seeing a downtick in labor growth, we can't really say that we are in a place of recession. It could just be stagflation, right? So until we see clear data, caution is obviously warranted. Okay, we need alignment between econ data, between policy expectations, between political headlines, and also with confirmations on the technical side of things. Okay, so we need those things to kind of confirm our trading ideas, so you can hold your trades longer. Okay, so yep, all right. I'll see you all next week. I'll try to get some content out that isn't just the weekly market outlooks, of course. But until then, I will see you all soon. Peace.